Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, the regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site is Nick Day, Managing Editor of Global Policy and Regulation at CoinDesk, Reba Beeson, General Counsel, AlphaPoint, as well as Chris Brodersen, Managing Director of the Business Advisory Group at EisnerAmper. We're here to discuss the turf battle for regulatory authority over digital assets in the U.S. It is great to have all of you with us. Welcome to Trade Talks. Welcome to Market Site. And Nick, it's interesting, there could be a lot of transition as it relates to policy with the administration changes coming up. You know, Fed policy has, just today has been revised. What are the high level issues that you're looking at within the regulatory space that you think is going to continue at least through the end of the year next year and where we are right now?
Yeah, so thanks for having me. Obviously, we're going to have a new president next year. No matter who wins the election, it's going to be a new president, new administration. So we're looking to one level, will the new administration bring in policy officials at the Treasury Department and at other departments who might be more willing to move something on crypto? President Joe Biden had an executive order, but didn't really follow up on that. We haven't seen any real policy initiatives from the administration. And then, of course, the independent agencies, will there be new heads for these agencies? Will they take a different tack to their predecessors? SEC Chair Gary Gensler, CFTC Chair Rostin Benham, as far as how they approach enforcement and rulemaking in these agencies.
Yeah. And what's so interesting, Reba, we really weren't talking about this in the beginning of 2024, but now that became part of the national conversation with both candidates discussing digital assets and potential policy, it seems to be that this is, whether it's a voting talking point or something more substantial going forward.
Well, it's certainly a voting talking point among those who are well-versed in the crypto industry and those who are lobbying and advocating for a change of policy, a change of legislation and the like, and even legislators and at the national executive level as well. There's a lot of advocacy there. I think that it hasn't yet hit the mainstream of Americans, so I don't know how much it might inform how mainstream America votes, although there's increased take-up in Americans embracing crypto and using crypto for their everyday needs and for investment purposes. So that ultimately will inform how policy gets framed in the future.
Yeah, and Chris, it's a great point that Reba makes, is policymakers have been working with the people that are advocating from the business side, because one of the bigger challenges is, and we've discussed this before, is being able to bridge the gap between these new assets that are gaining popularity, particularly on the institutional side. That's going to be a big test for this to trickle down and have that effect for more users to come on board.
Right, well the challenge is that the rules and the rulemaking that's happened were done at a time when we couldn't have imagined the assets that they're trying to control now, right? And so there needs to be wholesale change in a lot of these rules, and the problem is that right now we have a fractured regulatory environment in the United States, and we have some regulators like the SEC that are being very aggressive about trying to regulate via litigation, and that's not good for anybody.
Right.
So rather than taking a pro-advocacy approach and talking to the industry and talking to institutions and saying, what are the pain points and working together, instead it's just a very fraught relationship.
Yeah, I mean that's always been the thing, regulation by enforcement, because whether you're talking about stocks, bonds, digital assets, derivatives, if you don't have a framework to operate around it, you're kind of in a no man's land.
Although enforcement actions in some cases were a necessity because of bad actors in the market. And so, with the bankruptcies that we've experienced in the last couple of years and all those kinds of calamities, the SEC's mandate is to protect investors. And so it can do so by enforcement, short of having rules that are specific to this industry that can be useful. So I think that we'll continue to see more of that until such time as we understand exactly what some of the cyber risks are, what some of the security risks are, how to mitigate against them, and how to protect the investors.
But I think the part of the challenge is that we're not really getting a lot of clues about what the SEC is thinking through these enforcements and through these Wells notices. So the most recent one was OpenSea, the NFT platform. Yeah. They just received a Wells notice, and people are shrugging their shoulders saying, what's the basis, why? Nobody knows.
Yeah. Well, I mean, even if you think about global standardization, it seems as if that'll be almost impossible. But, Nick, if you can enlighten us here, how come other areas of the world, let's use the EU as an example, have been able to establish a framework?
Yeah, I mean, the EU, we've got the markets and crypto asset legislation, but that was the entire European Union's, collective lawmakers coming together and saying, hey, we want to make some kind of framework to address this. And they've been, I don't know if ahead is the word, but they've been pretty proactive on a lot of tech issues in general. If you look at their Digital Services Act and GDPR for privacy and such. So they've just been kind of more focused on this in a way that, for some of these questions, we really need Congress to come up with something more than just having a hearing saying, hey, let's talk about this. Most of the legislation we've seen has either gone nowhere or has had some momentum and then stalled out due to, either the Senate not picking it up or because, other stuff have happened and, all the momentum just went by the wayside, as we saw last year when Fit 21 worked its way through the House and then we had a speakership fight.
Yeah, well, Reba, do you think part of the challenge is the way that the U.S. legal system is structured, where law tends to evolve versus, okay, here's a new issue, let's just place framework around it?
Well, I think it's a little iterative. One of the key areas where we should be focused is use cases, so that we can use those as sort of the lead to have conversations with the legislators, with the policymakers. Because once we can identify really valuable use cases, I think that they come around to understanding it. It's a practical way of their understanding how the framework can be used, how it can be built out, how it can be helpful. And so I think that hearing last week that was done by the House Financial Services Committee, I think that might have been helpful in trying to have an understanding about what DeFi is and what the use cases around DeFi will be. So I think that they're starting to explore it from that perspective, which will be helpful.
Well, I mean, Chris, at the end of the day, DeFi is the market structure of these particular assets. I mean, it would behoove them to understand how market structure works. I mean, it's one of the most important topics that you speak about in traditional asset classes.
Yeah, of course. But the challenge is that not every DeFi platform is the same. They're all different. They all operate in different ways. Some of them are completely decentralized. Some have, a foundation that controls them. But the regulators don't even have that basis of understanding to say, okay, where are the platforms that are completely out in the wild versus where do we have platforms where we might actually have a management structure or at least a group of actors that are controlling the platform. But they're not even there yet. It's just everything is bad and everything fits the Howi test, which it doesn't. And therefore, we're just going to pretty much say no to everything with the exception of Bitcoin and ETH.
Right.
But I would add to that, it's interesting you say from that perspective, Chris, because just yesterday, Representatives Emmer and McHenry sent a letter to SEC Chair Gensler asking him to answer questions about DeFi and particularly about airdrops and whether they're considered securities. It's a gray area. And it's an area in which there's no clear management oversight, and yet it sort of harkens back to the days of the dot-com era, when we had shares that were just being issued for free and argument by the SEC that those constituted securities.
Well, this is where I think the SEC is going to be in kind of an interesting position because if you remember, I think last year or the year before, SEC Chair Gensler pointedly refused to answer if he thought Ether was a security during testimony before Congress. And I think we might get a similar response here because if he says, okay, we think here's what a security is and someone comes up with something that's slightly different, it's going to be a legal battle. If he doesn't, if he just lets the ambiguity continue, then he'll have, or the SEC will have the flexibility that it might want to, decide if they want to bring an enforcement action. And that may not be fair to the industry, but it kind of feels like that's what the status quo will continue for now.
Yeah. Well, let's take a step back for a moment here and establish some context, Reba, when we think about the Howi test and so forth. If we're trying to establish if digital assets or securities or not, why can't we just plug and play into existing legislation? What is that test? How does it help them determine what a security is?
Well, if I think about the Howi test back in the day, that was a unique, perhaps, situation as well, where the courts and then ultimately the Supreme Court were considering something quite novel. Is an orange a security, or is it the management of the orange when you wrap it around something and offer it to investors? Is that a security? And that's what we see evolving now with crypto. But as we've all discussed, there are so many different variations of it, so many different ways in which crypto can be wrapped that it's difficult. And I think that the legislators have spent a long time trying to get their arms around it. And now the courts are having to do it by the force of the enforcement by the SEC and also by the CFTC to a certain extent.
So Chris, when we think about Ether as an example, why can't it just be a commodity then, right?
Well, look at the eToro decision recently. What was interesting is that they will be allowed to continue to service U.S. investors with Bitcoin, Bitcoin Cash, and ETH. So that sort of sets people in motion saying, wait, well, okay, so wait, is it now considered a commodity? Again, we don't know yet, right? We still don't have the answer to that question. But I think that you have to, at least in the case of Ether, where do you draw the line between the underlying Ether and the ERC tokens, which actually may represent securities depending on what that token does, ERC20, ERC, pick a number, it doesn't matter.
Right, well, which is so interesting because you had mentioned before, when you look at a specific commodity, whether it's a soft or hard metal, now that you have ETF wrappers that make them easier to trade, right? ETFs fall under a specific set of rules. If you're trading something, such as electricity or oil or so forth, you're looking at the commodity set of rules. Right. So it can almost be the same thing. And I guess it's what we're trying to figure out.
It's interesting because it is kind of both. So the underlying is definitely a commodity. In the examples that you gave, for example, gold, the gold ETFs.
Right.
Gold is a commodity. And then the ETF as a wrapper makes it a security. So they can live in both worlds. And they're in that context and in the context in which they would be living in both worlds, they're regulated by both. And so there is a way for us to manage through that, even short of specific legislation on crypto. Just taking the lessons learned from those kinds of other wrappers that have promulgated investor interest in the market for a long time.
Which is so interesting to me, why the futures were wrapped into an ETF before anything else. I mean, it kind of seems a little bit curious to me.
Yeah, I think there's like a fundamental kind of disagreement between the industry and regulators where they'll say, if you're looking at any given token, was it sold to raise money? Was that money used to develop the platform? Just all those questions that are part of the Howi test. The industry or some of these companies that release these tokens or some of the decentralized entities will have a fundamental disagreement about the answers than the SEC does. And so that's kind of like where we're now in this position where every token's a security except for Bitcoin, Bitcoin Cash, possibly Ether, depending on whatever else. I think no other token has officially gotten a commodity status from the SEC and CFTC, but that is where all the disagreements kind of come from, and that's just where the courts are taking whacks at it, and it's every different court in every part of the country.
Well, you had mentioned before the DSA, right? That was enacted. Look how long we've been arguing 230, right? So it's almost, do you want it to become an argument that's as long as Section 230 as you're trying to, a different conversation, but establish parameters, around moderation and safety of the internet and so forth, but it almost sounds as if this is going to take a long time to figure out what path it's going on. Would you say any progress has been made, or is it really contingent on how we see policy shift in the next few months?
I haven't really seen anything beyond the litigation.
Right.
There's been no real shift. There's been attempts at SAB 121 and FIT 21, both of which failed for their own reasons.
There was some excitement around FIT 21.
There is some excitement around FIT 21, but it got through the House. It's just never going to get through the Senate. We just don't have time. And it does purport to try to settle some of these CFTC, SEC turf battles in terms of, what each regulator is going to do, but it doesn't solve all those problems. And the other problem is that neither of those bills addresses the fact that these assets will morph over time. We're not even thinking about trying to future-proof any of this stuff. We're just trying to get something into the market, and I think that that's just bad policy.
Right, and Reba, my concern is too, it will become a talent brain drain at some point, and you don't want innovation to be stifled because, okay, well, I'm not going to operate in the US, I just don't know how to, right?
Well, so from a global perspective, the whole digital asset world is exploding. There's so much going on in other jurisdictions, and we see it in the work that we do. For example, the Bitcoin wallet in El Salvador, the Chivo wallet, where Bitcoin is now also legal currency along with the US dollar. And then in all of the different areas where there were maybe sandboxes originally, but now there's actual great frameworks. So for example, Bermuda and a number of different jurisdictions offshore. And that's not really stymieing the market. It is definitely stymieing providing somewhat of a what we call a challenge to developing the markets in the U.S. But I think with the ETFs, we're going to have the ability now to build a really robust market around RIAs and other kinds of investment managers who will eventually put those assets into their portfolios. And that's how maybe we'll build around it.
Yeah, I think, and again, it kind of goes back to the integration of TradFi and DeFi, because at the end of the day, you just want the user experience to function. You want to be able to recognize that this is market structure, something that I understand.
Right, and with the appropriate investor protections and everything else behind it.
Yeah, well, you know, it's interesting, Nick, we tend to think very US-centric, very, you know, Western-centric. The fact of the matter is billions of people use this type of technology to build local microeconomies through either cross-border payment systems, or they're fighting, you know, they don't have as much inflation concerns because they're using a different form of value to be stored. This is happening.
Yeah, absolutely. I think part of the reason we are so US-centric is the US is a massive market, and there's just no getting around the fact that there's a lot of capital here that a lot of developers want to take advantage of as they're building these products and launching their companies. But yeah, if you look in different countries, we're seeing, you know, stable coins pegged to the dollar used as just a stable currency in countries like Nigeria, and we've seen it before where, you know, it was used for capital flight out of China. But we're also seeing, a lot of these tokens, some countries are looking at creating their own digital tokens as just an internal, better way of tracking their capital of their, citizens' assets and such.
Right.
So yeah, there's definitely a growth in this, but
But that makes sense though, right? If if you're in a region like Nigeria as an example where inflation is a concern, I mean the value just fluctuates so much. So if you have something that's pegged to the dollar, but even when you're thinking about public capital allocation and it's on the blockchain and it's transparent and it's accountable and we can see where these monies are going to in regions of the world that perhaps don't have institutional investment because of the concerns around corruption. Right? I mean, I think we need to think out of the box besides just Bitcoin being a store of value or what the next ETF is going to be. I mean, this could be a global game changer if you really want to think big.
I mean, that's always been the dream, right? Of the Bitcoin enthusiasts, is that this is going to create a truly decentralized peer-to-peer network where people can transact and move value amongst themselves without having to worry about, these governments that are failing in these high inflationary countries and, people banking the unbanked.
Right, and then that also provides fertile ground for use cases like remittances, which is a really large market and has a meaningful impact on being able to transfer cross-border using digital monetary value.
And that's how you grow local economies. That's how you bridge those gaps and getting out of cycles of poverty and so forth. I would imagine, Reba, because we do have legacy infrastructure, we do have a Fed, we do have agencies that clearly have a dog in this fight that can hinder progress relative to other areas of the world where it's fresh framework, if you will.
Well, yes, that's true. Although the Fed, I think, recognizes that this is a type of asset that can be used to transfer value peer-to-peer, and that it's something to be reckoned with. And so the Fed itself has its own sandbox looking at different use cases, but also it has its Fed Now program, which allows for this instant settlement, the intraday settlement, which is something commercial banks have been looking for. So I think that it's moving along in that direction.
Yeah, well, Chris, by the way, how do you treat cryptocurrencies from the IRS perspective, right? If you don't know if it's a security or not, that changes tax treatment.
Right, of course. So, from an IRS perspective, for example, they could say that Bitcoin is property, right? So, okay, so how does that tax treatment differ from, as you said, a security? What are the capital gains implications? Are they different? Are they not? No, not right now. But again, the hard part of this business is that when you look at the thing, whatever that token or crypto is, each regulator might have a different view of what it is and how you have to report that asset, either on your tax return or on your balance sheet or to the regulators themselves. If
we didn't think the U.S. tax code was complicated enough. All right, everyone. Thanks for everyone's insight. Thanks for joining us on Trade Talks, and thanks for joining me from MarketSite and Jill Malandrino, Global Markets Reporter at Nasdaq.